so we have begun to see in the market, in the charts, there is sort of okay, maybe this thing has some legs. Maybe the Bitcoin dollar system sort of makes sense, but you haven't really established why the US dollar system would benefit at all from having this neutral reserve energy asset. How does this generate demand for treasuries, and how does this keep the dollar Ponzi going? Isn't the dollar supposed to be competing with Bitcoin? Isn't Bitcoin the great slayer of national currency, of central banks? Haven't we been sold that Bitcoin is fighting the dollar? You were sold that. But as Trump said at his Nashville speech in 2024 at the Bitcoin conference during his campaign trail,
those who say that Bitcoin is a threat to the dollar have the story exactly backwards. I believe it is exactly backwards. Bitcoin is not threatening the dollar. The behavior of the current U.S. government is really threatening the dollar. The danger to our financial future does not come from crypto. It comes from Washington, D.C.
The people that think Bitcoin is fighting the dollar have it exactly backwards. And he and his team, which is heavily influenced by the founding members of PayPal, such as Peter Thiel and one of the first employees at PayPal after the founding, David Sachs, and of course Elon Musk with the merger of X.com, the initial X.com, which was a digital banking service that merged with PayPal. Seeing these guys with their huge influence on Trump, a lot of these guys were really early into Bitcoin, potentially even behind the creation of it. As a theory, people theorize this. We saw and heard it from Trump himself that it's not competing with the dollar. It is actually going to help the dollar. And the way it's going to help the dollar is through a new establishment of an energy commodity, a neutral reserve energy commodity, that in order to participate in this system, one has to buy dollars to get into the system. Much like the petrodollar system, we are creating demand for dollars by increasing the price of Bitcoin and having it be something that isn't really scalable day to day for all payments and for speculative trade. It is expensive by design in many ways to settle. It's incredibly much cheaper than than gold or a lot of other things to settle billions of dollars of value. But if you want to, move in and out of Bitcoin for high frequency trading, it's really expensive to do all of that on the blockchain. So they've created these dollar tokens that act as the trading pairs for Bitcoin that are known as stablecoins. And stablecoins are really the new Eurodollar market. They're these new dollar instruments that can exist in many ways outside of the regulatory regime of the United States, but in reality are backed by treasuries, are buying up US debt. And as the US comes to actually begin to deal with its debt crisis that was accelerated rapidly under the first Trump administration, the need for a net buyer of treasuries has never been more dire. So much in the way that the United States made this arrangement with Saudi Arabia, where they would take the dollars that came in from industrializing nations and taking those dollars in via the sale of petrol denominated in dollars, and then taking those dollars, sending them back to the United States, investing in the United States, whether it's through the stock market or more specifically buying treasuries from the U.S. government. This system was known as petrodollar recycling. We've now created the same mechanism where people can enjoy the increase of purchasing power of Bitcoin denominated in dollars, and to be able to use this newly found value at a high frequency in any sort of financially speculative way. You can now then move in and out of dollar denominated stable coins that are in mass. These issuers of stable coins are buying massive amounts of treasuries.